Morning, everybody. It's 10:05 on October 25th, and we're joined by Phil Flynn. Phil is works with the Price Futures Group and is a Fox Business contributor. Joins us regularly to talk about the markets. How's it going, Phil?
I'm doing good. I'm doing good. It's been a wild week with stocks. Larry's been knocking them out of the ballpark, man. Keep it up, Larry. Go, baby.
Thank you.
Yeah, he's
There
been
we go.
trading pretty well. It's been a lot of opportunities out there, very volatile. Yesterday was obviously a big sell-off. I was looking at CNBC before it saying, Nasdaq before today was on pace for the largest decline since October, since 2009. So we've definitely got volatility back and some people talking about some fear coming back. What are you hearing from the markets?
Yeah, I mean, there's a lot of fear. I mean, when you start mentioning the year of 2008, 2009, I mean, obviously people have bad memories of that period because that was the beginning of the financial crisis. Though, it's kind of misleading in the big picture because you look at what the stock market has done over the last couple of years. So the last couple of years, of course, we've had one of the biggest, run-ups in the history of the stock market. And as doomy and gloomy as everything looks here with all this volatility, it's probably just an overdue correction. We really, if you look at the big picture, we've been running up for the last couple of years on the expectation that the global economy was in sync, everything was going. You had every economy for the first time in history in the globe having synchronized growth, and so there was so much good news out there. The stock market was incredible. Now there's some concerns that there's some chinks in the armor, right? If you look at some of the emerging markets, there's problems again in Europe. You have Mario Draghi out there today saying he's worried about protectionism. You've got concerns about rising interest rates. You got President Trump getting mad at the Fed. You have all this uncertainty, but it's actually probably healthy for stocks in the long term to have this kind of volatility after the run that we've had. And if we get through this volatility without a total meltdown, and it turns out just to be a normal correction, that could really bode well for stocks for another big leg up.
Well, you do make a good point there on, it's been a very volatile week, very volatile month, but, if you take a look at the markets year to date, as of right now, we're green in both NASDAQ and S&P. So
for the moment, it's early. It's early. Wait,
right,
we'll try you the day. That's a stance.
I think the S&P actually did cross negative territory, closed in negative territory last night. And, it's funny, as I was starting to say before, the way the NASDAQ's moving, CNBC had that stat up, but give the market a few more days and it'll be up on the month. It's
Yeah, or record highs. It is whipping around.
Right now, the Nasdaq future is in a 180 point range for the day, and it's 10:09. That's for the past since yesterday's close, but still, we got some crazy volatility out there, right?
Yeah, it's been nuts, and not for it, and it's not for the faint of heart, I can't even underestimate too. I mean, we also had a situation where we had these terror bombs all over the place, and I don't think that helped the market psychology yesterday. I mean, because the market was trying to come back yesterday. We didn't have a lot of news. Earnings were really pretty good, but we saw that late day sell off. It carried through in Japan a little bit. Europe seemed to come back a little bit. It's up to the U.S. here today, I think it's a lot of differing opinions on the economy right now and where we're going. It's difficult to say with any certainty where everything's, how this is all going to play out. But you have two camps out there that are fighting it out. Big picture, you've got the bullish camp out there that's saying, listen. We keep hearing about a slowdown in the economy, but you look at the overall numbers, they're really not slowing down as much as people fear. Yes, we have rising interest rates. You've got, some companies that are saying, hey, this trade war is really hurting us. It's ruining our outlook. It's ruining our economy. But then on the other hand, you've got other companies that are actually saying, hey, the trade war is actually kind of helping our business. It's allowing us, so it seems like the trade war, there's winners, there's losers, and where it's going to play out. Now, if you're bullish, I think what would be the biggest catalyst you think for another bull run in the market next year? Um, my case is if we kind of hang in here and we continue this volatility, President Trump's going to be meeting with the president of China. If they come to some type of an agreement with China, that really could open up the door for a major stock rally and a big sigh of relief for the global markets, because I do think some of the trade war concerns, obviously, it's been holding back some of these markets,
Yeah, absolutely.
not because it's real necessarily, but just the fears.
Well, I think more so also the global markets would take a big sigh of relief on that one if that were to come to fruition. But the question is also what deal would there be? Um, but I think that's been one of the larger drivers of the global markets well before this month's turbulence in the U.S. was the protectionism that you talked about with the ECB, and the new kind of trade regime that we're seeing across the world.
Right, it is. Well, it's a new era. It's going to be interesting to see how it plays out. My bet is that the doom and gloomers are probably too doomy and gloomy about it, and the people that are way optimistic about it are probably too optimistic. But generally speaking, I think that I'm of the camp that I don't think the sky is falling yet, and I think the economy is going to be doing pretty good. As somebody once said, and it's probably true of this market. Hey, we don't have an economic problem; we have a stock problem. And stock problems usually work themselves out. As long as the economy stays strong.
Yeah. So let's switch gears and move over to the energy markets.
Yeah.
What are you seeing there? I see crude right now, D's crude 67.22, which is up 40 cents on the day.
We're following the stock market today. We did have a report from Genscape, the private forecaster on crude. It was kind of bearish. The supplies were up more than people had looked for. But, let's put into perspective the type of week we went through. I mean, we had one of the biggest sell-offs in the market we had since last July. Oh my gosh, it was back in July. On concerns. And the driver of that big sell-off were a couple things. Number one, the market was probably a little bit too high, too fast. Number two, inventories of crude were going up, but the main reason is because of what the Saudi oil minister said a couple of days ago. And what he said is that that the Saudi Arabia was going to pump as much oil as they could to meet customer demand, and that every other oil producing country should do the same thing. Okay, so basically that was a historic statement in OPEC, because this is the first time since 2017 that every oil producer in OPEC does not have a quota, which means they can pump as much oil as they want. And they got the okay from the de facto leader of OPEC, Saudi Arabia. Go ahead, pump away, guys. If you got it, show them what you got, pump them. And the reason why the market took that as so bearish is that they remember November 2014. And that was the fateful day when the OPEC cartel, Thanksgiving 2014, I'll never forget it, basically couldn't get an OPEC production deal. And they said, we're going to flood the market with oil and try to put shale out of business. And they declared a production war on oil. And that's when oil went from 90 down to 44, back up to 60, then back down to 25. And they flooded the globe with oil.
Yeah, that sounds pretty bearish to me. Why is that not bearish?
Because this is not 2014, this is 2019, okay? And in 2014, the producers in OPEC had millions and millions and millions of barrels of spare production capacity, okay? So when they said you could pump more oil, it actually brought more barrels of oil on the market. Okay, Saudi Arabia probably had 3 or 4 million barrels of spare capacity at that time. You had Russia that probably had millions of barrels of spare capacity. You had even Iran and Iraq and Nigeria. They had spare production capacity, so they could raise production. So you saw production actually go up at a time when demand was actually falling. Okay, because if you remember the economy in 2014, it wasn't doing very good, was it? No, we had worries about Europe. The Europe crisis was in full mode. You had a slowdown in China, a real slowdown in China, if you remember. They were manipulating their currencies. They had to change the currency rate. So you had some real economic problems at a time OPEC was raising production. That's why we got flooded with the market. Now it's a totally different world. The Saudis are saying, yeah, go ahead and pump all you want, because guess what? They don't have any capacity. Go ahead, raise it. Go ahead. You think Venezuela is going to be able to raise production? Do you think Iran can raise production? The UAE? These guys are already producing about as much as they can. They might be able to add a few barrels, but Saudi Arabia knows it's an empty promise, because the Saudis are about the only ones that have capacity to raise it. Why don't we have spare capacity in the globe? People were asking me, why don't we have spare production capacity? Because when prices crashed, in 2015 and 16, nobody had money to invest in capacity. We saw the biggest pullback in capital spending in history in the private sector. The OPEC countries were losing money out the wing. Is the wing a word? I think so. I think you can say that, right? Anyway, so they didn't invest in capacity, and they've been struggling. Even the shale guys, the shale guys haven't been able to invest in capacity and pipelines because they're still not making money. I don't know if you've looked at their debt. For some of these shale producers, so right now, what has happened on the demand side of the equation? We keep hearing about a slowdown in the global economy. We're not seeing it on the oil demand side at all. We're hearing China's economy is slowing, but you don't realize that their oil demand in September, the refining demand, was just short of the all-time record high that they set a couple of months ago. We're hearing here in the U.S., demand is slowing, but if you look at yesterday's EIA inventory number, we had the strongest product demand for this time of year that we have had since 2004, right? And so, we're not selling off necessarily on the fundamentals of where we are right now. We're selling off on fear of where we might be a couple months from now. But is that a good sell? I don't think so. I think the market is being a bit too complacent about being able to replace Iranian supplies. The latest data that I see from some very good sources that Iranian exports are already down 1.5 million barrels a day. The Saudis, if they add 300,000 barrels a day, which is kind of what we're hearing that they might do, still leaves the market short by 1 million barrels. So that's going to leave it up to Russia, and the other OPEC countries and the countries here in the you heard in the U.S. shale producers to try to fill that void. And let's assume that they can do it. Let's say, all right, yeah, we can replace all that oil, no problem, baby. Then what happens if you have another disruption somewhere in the globe? What if Libya has an uprising again and we lose Libyan production? Who's going to fill that void? Or if Venezuela's production tumbles to zero, who's going to fill that void? You see, our bullpen is spent. Okay. We understand that as White Sox fans. We didn't even have a bullpen. We're going into the game with no bullpen. So if we do have a disruption, we're there. Global spare production capacity, it's at the lowest level in history, especially if the Saudis follow through on their promise. So we can't bring on oil in an emergency. What did we used to do when we need oil in an emergency? We'd call Saudi Arabia, right? We'd call Ghostbusters, right? But they don't have any. They're already using everything they've got. So, and interestingly enough, we had a report after the Saudi oil minister said that and the prices dropped. We had a quote overnight that he said, well, we also might, not only will we pump as much oil as we can, but we might actually pull back on production if we feel the market's getting oversupplied. So he's talking out of both sides of his mouth. Listen, he wanted Donald Trump happy, so he said, yeah, we're going to pump as much as we can. they're under a lot of pressure because of the Khashoggi murder. So they've got to put their best foot forward. They need to keep Donald Trump happy because Donald Trump is going to have some influence over Congress about what kind of sanctions they're going to get hit with. And Donald Trump's using this to his advantage. He's basically come out in public saying, yeah, you guys, it looks bad. It looks like really bad. I'm going to let the Congress decide. But, we spend a lot of money to defend you guys. It would be nice that you kick up a little money. So it's like he's asking for a payoff. Hey, you want us to go easy on you? Let's start kicking a lot of, money back, which, by the way, has precedence in the global market. People forget that Muammar Gaddafi actually paid off the world. He had that terrorist attack where he took over the ship. He was proven guilty of sin. Everybody knew he was a murderer, but the international community allowed him to settle and pay money to get out of it. So it's going to be interesting to see how that plays out, but it's going to be interesting.
Yeah, absolutely. And like you said, with if Saudis, are saying basically, hey, pump, everybody, there's no production. And actually, I am seeing its headline that came out at 10:10 that says OPEC should increase production at its next meeting. If everybody's increasing production, given the global economy that it hasn't been doing fantastic, the global economy, you would think a lot of these places would be wanting to pump as much as possible.
Yeah, and I mean, listen, the oil producers a few months ago were dying to produce more, and they were showing restraints. Now, now they're allowed to, and now it's like it's like a dog chasing its car. It's like, what do you do when you get it? I mean, I caught the car. Now what? Now I can pump more. Now what? How much more can I pump? And that's a big question. And of course, they have to be right. This is the problem if you're an oil producer. If the economy does slow and you start raising production, well, then you're going to lose money, okay? Because the prices are going to plummet. It's kind of like the shale guys. If the shale guys raise production, they're already, losing money on every barrel. They're going to try to make up for it in volume, and it's just going to get worse. So, the oil producers will be sensitive to the fact that if prices continue to plummet, that they won't raise production at the next OPEC meeting. They may even remove some barrels if they think the market's oversupplied. But it's interesting what you just said about the global economy. Well, the global economy is slowing. The global economy is slowing. We're reading that. We're reading that. We're reading that, and it may be true, but there's a disconnect right now between the slowing economy talk and oil demand. If the economies indeed are so poor, why are all these consumers consuming more oil? Doesn't make sense, does it? I mean, so there's something going on that isn't adding up. If you believe the slowing data, slowing economy data, the whining and the complaining about that, which could be very true, why do you keep buying oil if your economy is so bad? So, and I don't know the answer. Maybe the answer is that because of the recent price break, they're trying to buy as much as they can for winter. Maybe the answer is because the entire world is, has a shortage of distillate fuel going into winter, that they have to continue to buy no matter how bad their economy is. We know that's the case in China. The China president came out and said it the other day. Hey guys, we got to start buying some heating oil. We don't have enough to get through winter. So, don't wait. Don't expect the government to come to your rescue, 3 months from now when it gets cold. So maybe that's it. Or maybe, which can happen, and it's happened before, that people are looking at stock market and they're looking at some of the economic data, and it doesn't truly reflect what's going on in the ground. For example, you look at data out of China, we're slowing, but the data doesn't set necessarily gist with what we're seeing on the actual demand side. So it's a conundrum, no doubt about it. But it's a conundrum that could have huge consequences for prices going forward. Because if the economy isn't as bad as people fear, then the price of oil is probably $10 too cheap right now or more.
Yeah, it's an interesting, like you're pointing out, that's an interesting disconnect, and I guess we'll wait to see which one is telling the truth, is which side of is
Yeah.
correct.
Yeah, I will say, um, every correction that we've had on oil in a short period of time, like we've had three major corrections like this in this bull run. Just 2 days ago, had one in July, where we had a 4% correction in a day. We had one in May on Memorial Day, and and on every one of those breaks, we saw demand start to go back up and prices rebound. Maybe this time will be different. Maybe we've come to the big slowdown in the global economy, and the top's in. But I think the jury is definitely still out on that argument.
Yeah, absolutely. Look, when you get volatility in one market, and when I say one market, the equity market like this, it definitely brings in a lot of volatility in all other markets, and you're seeing that in crude. I think we got to a point in crude where everybody was long in terms of trend followers. A lot of money was specs were pouring into crude, and so that got us up above, in that 70 range, fueled us up to 77, and then we're back here at 67. Still up very nicely on the year. And like you said, there are a few data points that are leading you to think that we're at an interesting inflection point here for crude and most markets. So we'll definitely keep a close eye on that.
Yeah, absolutely.
All right. So thanks a lot for the info.
Thank you, Mike. You got it, man.
All right.
It's been fun.
Phil Flynn, Price Futures Group, Fox Business Contributor. We appreciate it.
Keep up the good ones, Larry. Come on. Keep those trades coming, baby. Come on. Let's go.
I'm trying.
All right.
Not as easy today. All right. Take care.
All right, buddy. Thank you, man.
Bye-bye.